This is Andrew Stotz of Stotz Investment Research, looking at Hong Kong, which, from what I can see, looks like the least attractive in Asia. Well, let's take a look. First, we'll look at the GDP of the country, and we can see that GDP growth over the last 4 quarters was 2.83%. And what we can see is that's relatively slow compared to the rest of Asia. The main contributors were investments and private consumption. We can see investments grew at 9.2% and accounts for 21% of the overall market or GDP. And therefore, that was the main contributor. Net exports were a drag, which we can see there. So let's take a look at the overall market and remind ourselves of what's going on there. There's 7 million people in the country and in the region, special administrative region of China, and the per capita GDP is $42,000. What we can see is that the market size of GDP is massive because it is a financial center, and the market cap of the market is over $3 trillion, and there's 1,896 companies listed. What we can see is that analysts are expecting earnings to have a recovery in 2017 to 9% versus a slow 2.9% in 2016. Consensus estimates are below the Asia average, so it's not a fast growth market at this point. ROE is the lowest in Asia right now. The good news was that dividend yield wasn't bad. So now let's look at the 4 elements. The overall ranking is at a 1, so it's a pretty low ranking right now. Fundamentals, we can see, it's least attractive in Asia. Fundamentals, lowest ROE in Asia. Valuation, well, low price to book and moderate dividend yield. And then momentum, well, it has price momentum that's moderate. So these two are ranked as average, as a 5. Finally, risk, the beta to Asia ex-Japan and price volatility of the market are relatively high. Let's take a look at the final section, which is the sector performance. And first of all, the real estate sector accounts for 17% of the market, infotech 16%, and financials 15%. What we can see next is that the infotech sector was up 24%. Landing international development was up 129.7%. The worst sector was materials, and Shuanggang Fushan Resources Group was down almost 24%. So not that attractive at this moment in time. All right. Get access to additional research and articles by joining our free newsletter at becomeabetterinvestor.net/join. See you there.